help you navigate.
What is up, everybody? We are live in studio, in living color, if you will. Thanks for joining us. I'm Jonah. This is
Jesse Durham.
And we've got one of our coaches with us as well. Why don't you go ahead and introduce yourself down there, Sergio?
What's up, guys? Sergio Loaiza, also in Greenville, but not in studio today.
There we go. I love it. So normally I've got the other banking bro next to me in studio.
Right.
But I guess
I'm a type of a banking fella.
There we go. A fella. That sounds about right, Jesse. That sounds about right. But man, we are so excited to be here. This is our Cash Coaching Infinite Banking Hour. It's our Ask Us Anything hour. It's our time where we get to talk a little bit about the infinite banking concept to all those who are interested in joining us live and watching along with us, where we can answer your questions and give you a little bit of insight into what we are doing in our lives with the infinite banking concept, right?
Real time.
Yeah. And I think that's really cool because infinite banking is private, right? It's the private use, the privatized use of being a banker in your own life. And so what that means is if you don't have people that are willing to share, you probably won't know about what people are doing, right? And so that's why we come on in this hour. We want to share with you what we're doing. We want to share with you the questions that have been asked of us. We want to share with you what other people that we've been working with are doing, so that way you can understand and have a better grasp of what infinite banking is. So before we jump into the meat of our show, Jesse, if you wouldn't mind, why don't you give us just the 30-second or 1-minute pitch on what infinite banking actually is for those who are tuning in and maybe they don't know.
Sure. So we all do banking. We have bank accounts and we have loans and we finance things in life. And like you said a moment ago, it's just the way for us to privatize that. It's the way for us to control it. It's the way for us to profit like banks. I mean, they're very nice buildings in nice parts of town, and there are lots of them because it's a very profitable business. We help people privatize that.
That's it. That's what we do day in and day out. And that's what we want to talk to you guys about here this afternoon. It's all about the infinite banking concept and the way that we can make sure that you understand exactly what that is and how it works for us, for you, right?
Yep.
That's what it's about.
How to do it.
Okay, so before we jump into things here, why don't we give a little bit of like a infinite banking insight, right? A little bit about what's been happening for you in your life, Jesse.
Okay, sure. Well, I'll tell you the topic that I've had running in my mind here recently then, because we're at the start of 2025. So a lot of people are probably looking still back at 2024.
Yeah, they're trying to summarize the year,
yep,
right?
They're wanting things to be great and better in 2025. And one of those things that happens to everybody right here at the start of a new year is taxes. I mean, we just left the Jesus story, right, where everybody's got to go to their town and be taxed. And now we're here in 2025 and everybody's staring down at taxes. So if I could share an insight on taxes, not being a tax expert, not being a tax lawyer, but I'm a fella, like I said, who works, earns money. I'm an American and I pay taxes. So for folks that work for themselves, maybe the discussion looks one way. And then for folks that are employees and they're pursuing their career and climbing the ladder and those types of things, taxes still applies to both of those. So I'd talk about both real quick.
Yep.
Okay. So I, like you, have a background as an employee. I had jobs before, right? And HR just automatically took a portion out, right?
You got to fill out a W-4 form, if I'm not mistaken, when you're an employee.
Right.
That's the withholding form. So they want to know, hey, if you know one or two things about the taxes, how much should we take out early to make sure so you don't get a bill at the end of the year? That's the withholding W-4 form, last I checked.
Yep.
That sound right?
And I think that most people are just going through the motions, right? And checking the box that they think applies best or whatever. And then they don't worry about it, don't touch it, don't look at it, don't revisit it, and not cognizant of it, not proactive about it. Well, I just remember catching on to the idea at some point to where, oh, well, I don't want to send money early or extra or often to Uncle Sam. I'd actually rather just pay what I have to when I have to.
There you go.
So I went to HR and I said, y'all quit taking so much. I want to take it home. I earned it, right? It was on my paycheck, but I was letting Uncle Sam get it early and often. Didn't want to do that. So for folks that are in that category of you're in your career, you might want to consider going to HR and stop sending so much money to Uncle Sam early and often. What if you could divert that to this private banking system first and then account for taxes later on?
I like that. Sergio, what do you think about the tax conversation and how that applies maybe to what we teach people with the infinite banking concept? What are your thoughts?
Honestly, for me, it's really simple. It's about figuring out how to keep the money we make. I mean, ultimately, I see all these entrepreneurs, and I'm an entrepreneur myself. I've been an entrepreneurial income for almost 10 years, which is a completely different game because the idea is how do I keep the hard-earned money that I'm making in my pocket, right? And so for me, man, the tax code and the rabbit hole is so big. I mean, I watched something I watched something yesterday about just some of the credits that you can get for having children and how literally that, like, I believe it was like 20 something percent of people don't even take advantage of these tax credits for their children. And so therefore just like Jesse said, this money's already coming out of their paychecks and they don't go back in to claim them. And so guess who gets that money? The government does.
Yep.
And I mean, it's not like, hey, we're not fighting the government here, but ultimately, hey, if that's your money, why not keep it? So, I mean, the rabbit hole is so big. Ultimately, what it comes down to with what we're talking about, I'm just excited I found a way to keep more money in my pocket by having my own banking system and being able to run money through my own system first and keeping as much money in my pocket as possible for my family.
I love that. The people in the back are applauding.
Yeah.
Right. Well, all the fans.
Let's talk about the business owners then and the entrepreneurs out there, because they don't have the W-2s and the W-4s and all this other stuff, right? So normally a lot of folks will pay those taxes quarterly.
Yep.
And what we're saying is, listen, run your business. You know your business, run your business. You got taxes to pay your taxes, right? Like, we're not giving advice there, but we are saying, what I would say is, if you could add one step to what you're already doing, build capital in that private banking system first, where you earn a death benefit, cash value, you stand to earn dividends. You got so much control and you still got access to capital.
Yep.
That way you still can pay the taxes every quarter or however it is that you run things. Just by adding that one step, you make yourself so much more in control over your capital, put so many advantages, to your side of the table that you just otherwise ignore and forego. Like Sergio was saying, we forego so many things, and the banking function is a big one. So employee, business owner, doesn't matter. Consider adding that one step. You have a lot more control, a lot more profitability.
Man, I think you guys both hit it right on the head. And I love the statement. You both made it. I just want to keep more of the, Sergio said, I just want to keep more of the money that I make. Mm-hmm. You said you got wind of what they were doing with the taxes. You decided, nah, I'd rather keep it. Take it home, use it, right? And that's what we teach people with the infinite banking concept. It's about saving your money, spending someone else's. We've coined this phrase, the save and spend system, for those reasons, right? Yep. For those reasons. So if you're just now joining us, thank you for being here. This is our Ask Us Anything cash conversation live coaching session. I'm Joe Nadeau. In studio with me, we've got
Jesse.
And one of our other coaches joining us from Greenville, South Carolina. Down below, we've got
Sergio.
That's right. Sergio. And what we teach is,
or you can say it like that. I mean, that sounds like a romantic Zorro movie. You just
there we go.
That's right.
Covered
I haven't watched Zorro in a while. That's a good one. That is a good one. But what we teach here on this channel is the infinite banking concept, or as we like to call it, our save and spend system, a way to save your money and spend someone else's. Mm-hmm. Infinite banking is rooted in the product of whole life insurance and the process of becoming your own financier for the purchases, the life decisions that you've got going on, just like we all do. So one of those things, of course, is taxes. Everybody's got to pay them. I think we've got a deadline of April 15th. That's pretty normal this year. I don't believe that they've changed it. I actually know that they didn't change it. I looked it up. I'm like a nerd. I look up some of these things. Just double check.
I love getting your rundown.
Just to double check, because they change stuff. Right. And if they change the date, I want to know.
Isn't that an important thing to recognize, that they can make changes.
They've got the
that's
control.
That's a big part of,
right. Who came up with the term "he who has the gold makes the rules"? Who are we accrediting that one to?
R. Nelson Nash.
Are we?
I mean, that's who we commonly would with infinite banking.
Yeah.
Well, give me your response.
No, I was asking. I was literally asking. I don't. Okay. There's got to be an old Chinese proverb.
I mean, it might even be in something like the richest man in Babylon.
Okay.
You know, could I mean, that's a good book.
Right. There's very few things that are original nowadays. Right. So you think about it, and somebody came up with it before him, but we'll give
nothing new under the sun. Right.
Right.
We've got a producer in the back who threw it up on the screen for us, and it is saying it is a common proverb, but they're not going to attribute it to any person, according to the Google.
So for the relevance of our conversation today, I said R. Nelson Nash because that's one of his rules: is he who has the gold makes the rules.
The golden rule, I think he calls it.
Yeah.
Mm-hmm.
Wait, but I mean, should we say he? I mean, it could be changing. He who has the crypto. I mean, just saying.
Bitcoin to the moon, right?
Yeah, I mean, just saying.
I love that. Hey, we got a good comment from somebody over there on TikTok. We appreciate you, TikTok. Thanks for joining us. What we're going to do now is we're going to dive into a little bit of a would you rather, right? A little would you rather. We asked a question to some of our followers, the people in our Facebook group, Infinite Bankers, this last week. We got lots of responses. And so now let's take a look at the question.
Cool.
Okay, so this question specifically is, would you rather pay higher premiums into your infinite banking policy? And of course, if you pay higher premiums, you'll have a faster growing policy. Or would you rather pay lower premiums with a little bit slower growth? But of course, that's going to provide you greater initial affordability, right? Would you rather stretch yourself for the higher premiums to go faster? Would you rather reel it back in, go with lower premiums? It'll go a little bit slower, but of course I can afford this. So we had around 50 people or so interact with this question. Before I tell the audience what the 50 people or so voted on this question, we gave them a few options. We said you can go higher premiums, you can go lower premiums, you can go right sweet spot, right in the middle. Right. We had about 50 people interact. We asked it on YouTube. We asked it in our Facebook group. We asked it a couple different places. Before we get into the responses, Sergio, you're up first. What's your answer and why?
This is probably the worst answer because it depends. I mean, it all depends on the where I'm currently at in life. So if I want more cash value and I want to be able to put my cash to work right away, and I'm more focused on maybe paying off debt, maybe making some big purchases, then 100% I'm gonna choose, hey, to make sure that I'm okay, that I can pay the premiums. But if I've got extra cash flow and I've got I've got extra money, lazy money, I'll pay some bigger premiums to make sure it grows long term for generational wealth and things like that. So I think it just depends. Everybody's situation is going to be different.
I love that. What a good answer. Jesse, you're up next. But before we get your answer, we've got to give a big shout out to Goddess Amber over there on YouTube.
What's up,
She
Amber?
is asking specifically, we can read it here. Hey, everyone, how do I get started as a gig delivery worker to set up this for my family of 5, 2 adults, 3 children? Would you please give her a response?
Yeah, same starting point as anybody else. And I appreciate the background. I mean, I appreciate you saying something about the family and something about the career. And on our one-on-one consultation calls that are free, you can find that contact info everywhere where we have our stuff. We go into those details, right? Because you should have a custom plan for what you want to do. But those initial steps are going to be the same. We've got a presentation video, 55-minute video. Okay. So when you can sit down just with an hour, sit down with that significant other, watch it, write down questions, have those ready to go over on that private consultation call. So you've seen the full information for yourself. Of course, you can keep asking questions here. This is what we're here for, right? But you can have that one-on-one conversation about the real nuances and details in your life, in your goals, in your aspirations, in your plans, and come up with a custom plan that works for you. But you need to see the full information first. And maybe you have. You can let us know in the comment section if you've already seen that, and then we could address some things here. We'll field more questions.
I love that. But you got it exactly right? We'd like you to watch the full presentation. Make sure you got it. As soon as you watch that, just click the link click the link to book a call and we'll jump on with you. We can do phone calls, we can do video calls, whatever makes the most sense for you, whatever you like. If you live in Greenville, South Carolina, feel free to come by the office. We've got lots of people who come by the office and want to talk to us in person. Make sure we're real, right?
We're real.
They poke on us a little bit. Make
we
sure
eat
we're
lunch
real.
too.
We do eat lunch, and we can walk you through it. So super good question. Okay. Because you just answered that one, I'll skip your turn. I'm gonna go next. You go last.
Yeah, that's cool.
We've got from Instagram, ex-Mennonite banker saying, stretch. He wants the higher premium, stretch. But he didn't actually think that way initially when he got his first policy. And I agree. So here's my answer.
We all look at it differently and look back at it differently.
We should. Hindsight's 2020, right? So here's my answer. When I first got my very first policy, I went. So I thought I was stretching. This is going to be interesting. Interesting answer. I thought I was stretching with the premium that I picked. I actually was denied for my very first policy because of a speeding ticket upgraded to a reckless driving ticket that I did not know I had.
Reckless.
Maybe you've heard me talk about that before. I did not know I had this thing. So I end up getting denied. We had to go with a different insurance company who didn't care very much about the driving record. So perfect. Now I do have the policy. Because we had to switch in that time period, I waited a little longer than I wanted to wait. So I then reduced the premium that I was going to put into the policy. Still a stretch because I had spent money. It was a stretch for me. And then hindsight's 2020, about 6 months later, I went, that's not a stretch at all. I got more money. Right. And so I started a new policy, second policy, the exact same as the first one, even though I thought the first one was a stretch.
Okay.
Right. Once I realized the benefits, I came up with more money. Right. All of a sudden, when I go, oh, it's working a little bit, I came up with more money.
So what was maybe the timeline between, and not everybody's going to be the same, but what was the timeline maybe between the first policy, second policy?
I believe the timeline was the first policy was in May, and I can go look. I do have the date saved, but I believe the second policy was August.
Interesting. It was 8 months for us. It was 8 months from our first policy to our second policy.
I believe the second one was August. Cool. So that's it. Okay, we got another comment coming in from YouTube. Man, I don't want to say the name. I'm going to mess that up. Sergio, you got it, man.
All I can see is help. That's
there we
the
go.
comment I got.
There we go. Help. All right. So if you're watching on YouTube and you want a little bit of help, you should just click the link in the description. So on our YouTube channel, you can go to the channel and there's a link right there. If you click it, you'll get not only that video Jesse was talking about, but you'll also get the calendar. So you can jump on our calendar and just chat with us one-on-one. We'd be more than happy to help you.
Yeah. Right. And then another great resource, and Amber's back in the chat, we'll get to that, is that Infinite Bankers Facebook group that we've talked about.
That's it.
A great place to continue conversation as well. That's where a lot of these comments are coming from.
I love it. Amber is back in the chat. Why don't you you answered the last one?
Yeah. So first time seeing us? Oh, no way. Okay. From Chicago. Cool. Wanted to set up life insurance, infinite banking, lost 19-year-old, difficult to pay for the arrangements as you weren't prepared. I'm very sorry to hear that. Feel for you. Haven't been there. Got 3 children of my own. It's a reality, y'all. And when you are in the headspace of at least talking about legacy, preparing for the future, having some guaranteed capital for those hardest times in life, it's a worthwhile conversation in and of itself, right? Now, if you add infinite banking on top of that, oh my goodness, we could have control and profitability over our compounding pool of capital for our whole lifetime. It's beautiful, right? Because you can do both those things at the same time. You can be creating legacy, accounting for the inevitable. 100% out of 100 Americans die.
Yep.
Those are the statistics, right? 100 out of 100. Not to make a lot of your situation, Amber, just trying to create a little levity here too, right? Because I feel so sincerely for you, not having been there myself. You get to do both at the same time. So I'm glad that you found us. Since you haven't seen our full introductory presentation, that's the place to start. Okay, back in 2015, I saw a presentation. Jonah, in the beginning, he saw a presentation.
Yep.
It'll give you all the nuts and bolts that you need to see and hear from us. prior to that one-on-one conversation where we can come up with that custom plan if that works for you. Okay.
That's right. So since we're on the topic, I over the Christmas holiday, my family, it's probably me, I don't bring it up very often, talk about people passing and such. But Amber, just as it relates to you, my father passed away when I was really little. And for the first time, mom, who's still with us, said that she got $20,000, I believe. It was either 12 or 20. She couldn't remember when dad passed away. And immediately followed by, and it wasn't enough. Right. And I was, of course, you had 3 boys.
Yeah.
And whether it was 12 or 20, that's not enough. Right. Yeah. She used that money to purchase her first house, which is kind of the house that we had back in the day. But imagine that 12 or 20,000, whichever one it was, and you use that money to buy the house, you're out of money. You're not eating after that. Right. Funeral arrangements, bought a house, it's done. Right. All that money's gone.
Cash flow that had been contributed to the family gone.
Right. So I definitely feel for you, Amber. Thanks for joining us and being around. And yes, we'd love to, seriously, we'd love to talk with you. Please click those links because I'd love to see you on the calendar. So make sure that we can chat.
Yep.
Oh, man. Okay. Thank you guys so much for joining us. If you are just tuning in live or you're wondering what this is our Ask Us Anything cash coaching infinite banking hour. I'm putting all the names in there.
I love it.
But the reality of what we're doing here is we want to talk you through what infinite banking actually is. We want to talk to you about how we use infinite banking in our lives. We want to talk to you about some of the financial myths that exist out there that they're feeding us, that we've come to realize, just like you did with the taxes, maybe I don't want to participate in these plans and programs. Maybe there are other options out there and I just need to keep looking, keep searching and figure them out. So what we do here on our channel is teach people the infinite banking concept. That is the process of using whole life insurance as a personal bank to become a private financier of your cars and your houses and your student loans and your credit card debt and the new purchases that need to be made in your life. And that's what we do. That's what we teach. We teach people to save money and spend money at the exact same time. And with that, Sergio, I'm going to give it to you. I want you to take it away. Give us a little FAQ, some of the things that you've been hearing or some of the things that are out there, frequently asked questions about infinite banking.
Yeah, of course. I mean, there's obviously tons and tons of different questions when it comes to infinite banking. The most common question is really just identifying what it really is. A lot of people don't really understand what it is because they're used to only hearing about insurance through the basic term insurance, right? And so they don't even understand that what is this infinite banking thing? It sounds really cool, catchy name, blah, 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 but they only know to internalize everything through what they've seen in the past, which is obviously term insurance. And so one of the biggest questions that once you get down the rabbit hole and you start learning a little bit about the different types of insurance, one of the biggest ones that I see is, hey, well, I've been told by this person or this person that I should just buy term and invest the difference, right? Buy term and invest the difference. Now, it's funny because I hear that a lot too. It's something that I was told by friends that are in the space. But here's what it comes down to. It's still a lack of knowledge. And I don't think it's like apples and oranges, right? There's not one thing for everybody. In my opinion, there's not one thing for everybody, but the one thing that everybody should want is protection long term, not just temporarily, not just term, right? Not just temporarily. I want protection long term. So really what it comes down to when you're talking about that topic is really getting educated. It comes down to knowledge is power. And I think the biggest thing that I've seen when people are asking that question to themselves or asking that questions to others is I've heard it said this way, like one of the most I think Jesse, I'm sure you'll know this, but I think I've heard it in one of your videos before. But it's like one of R. Nelson Nash's best quotes in his book, and a lot of people, I don't know if he came up with it, but it's like one of the most dangerous things in the world is not what we know, it's what we believe to be true that isn't true. Yep. Right. And we live in a world where sometimes we get fed so much information that after a while, it doesn't matter who comes to us with new information. We don't actually want it to be true. So we don't investigate it. We don't want to learn about it, right? So that's one of the biggest things, guys. The question is that is, hey, should I buy term, invest the difference? And I can go down. I've got some notes here that I was going to talk through. I don't know how much time we have, but really what it comes down to is this. This is the most simple way that I can kind of articulate it. Is if that's the case that you want, good for you. That's fine. Do some research. But ideally, is this the psychology behind that is if that is the case, then don't ever buy a car. Just lease your car and invest the difference.
There we go.
Don't ever buy a house and rent the house and rent everything in your life if that's the case. And now, if you're using that logic, go ahead. Yeah.
I mean, he's I got a hot seat for this topic. I got a hot seat, and you're hitting it right on the head, because the whole idea of, so first off, I want to go slowly on this one.
Let's go.
This is okay.
Go ahead.
I want to go slowly. Okay. So everyone loves term insurance. If you're thinking life insurance, people always scream term insurance. Do they not?
They do.
They literally from the rooftops sometimes. Yep. Term. And the reason that they say term is because it is cheaper. It is less expensive. Yep. That is the reason.
Yep.
Here's why.
Cost of a pizza, they'll say.
Right. Here's why I don't like that argument right there. Like, let's stop right there. If you Google how often do term insurance policies pay out, do you know what percentage comes up on Google? Sergio, do you know? How often do term insurance policies pay? 2% comes up on Google.
It blew my mind. Honestly, I'm like, wait, what in the world?
Let me ask you a question, Jesse. You're ordering pizza. 2%, they're going to deliver it to you. How confident you feeling about eating tonight?
I'm not very confident on that number.
2%? That's basically you're not eating tonight, right? Does that make sense? It's not 50-50.
Right.
Like maybe.
Which sounds like a gamble.
Which sounds like it is 2%. You're not getting, so how is that beneficial? You bought the cost of a pizza and you paid it for 10 years or 20 years or 30 years, knowing you're not getting the payout.
Right.
Knowing it's not coming. Oh man, it burns my bones. Secondly, Sergio, you hit it right on the head. This philosophy of buy the cheaper option so you can then go invest the difference does not apply. No one applies that to any other area of their life. You understand that there is inherent value in things over just the cost of it, right? And does everyone not know that it costs a little bit more money to eat healthy? Isn't that what you hear?
Yes.
Oh, eating healthy costs a little bit more. But if we apply this buy term, invest the difference logic, then you'd eat unhealthy. You'd eat McDonald's every day.
Every day.
And you'd invest the difference, would you not? Right? Isn't that the logic?
Ignore the value.
Isn't that the logic? But we don't ignore that. When do you ignore value? You don't ignore value. This buy term, invest the difference.
Dude, I got stories. I got stories and personal stories. My uncle just the other day, we're at a family event and he looks at me, he's like, been watching some of the videos and content you guys have been putting out. It's absolutely phenomenal. I wish I would have seen stuff like this years ago, because I can't tell you, our term policy just ran out. And guess what they're asking us to pay now?
What's that price on the renewal?
Yep. He said, that's what they're asking us to pay now in order to get reinsured. He's like, there's no way we can afford that. We can't afford it. So we can't even afford to get insured anymore. I was like, well, that's where education is key. We're not saying, guys, don't get insured. We're not saying term, whole life. What we're saying, just get educated so that you can get what's actually going to protect you long term and your family and accomplish the goals that you want. So that's why the education is so key. Man, there's just so many stories. There's so many different things I could talk about when it comes to that. But you're exactly right. It just comes to it's a philosophy. It's a way of thinking. And that's why for me, when I saw the way of thinking of banking for myself, protecting my family long term, maybe even being able to, hey, maybe you want a little bit of term, but put the term in the proper policy that you can then convert it. You just got to get educated.
Yep. You know what's crazy to me? When I first bought my very first house, if you've got a house out there, you're going to understand this. I got a bunch of letters in the mail, like pink ones and yellow ones. They put them in colors for whatever reason. Do you get colored letters except when you buy a house? Why are they colors all of a sudden when I buy the house? Anyway, I get all these colored letters, and half of them talk about mortgage protection, mortgage insurance. And I started reading through, because I read things. I'd already told you guys this. I'm a nerd. I'll read it. So I read the thing, and this is just term insurance. I'm like reading it, and I'm like, this is just term. They called it mortgage protection to try to sell it, but this is just term insurance. And so I think I should be clear for everybody who's listening and watching. I'm not saying that I hate term insurance.
Right.
I am not saying that.
Right.
I'm saying I do not like the philosophy of buy term and invest the difference. That is a philosophy that you apply to this one area of your life insurance, that you would never apply to any other area of your life. And that does not sit right with me. It just doesn't sit right with me. You can't apply it here and not apply it anywhere else. Right?
Yes, sir.
You never, Jesse, you getting on that moped?
No.
Right? Buy term, invest it. Buy the moped, invest the difference.
Nope.
Right? Why not? Why wouldn't? What happens when it rains outside?
Right. Exactly.
You want some you want a roof?
I do.
You know they cost more though.
Okay.
See,
they even can come with 4-wheel drive and other things that I
value over it doesn't make any sense. It drives me up a wall.
How about that can't afford it part from Sergio's uncle?
Yeah.
So let's talk about why people maybe can't afford the more valuable thing. Is it because we're bleeding out interest dollars to these commercial banks and conventional financial lenders, right?
Yep.
Instead of keeping that money for ourselves, like we've been saying all along? If we can keep more of our money, doesn't that make the values that we want to pursue in life all the more accessible?
Yep.
Right.
I love it.
So I just wanted to plant a seed of encouragement to everybody. Some folks are younger, some folks are older. Everybody's seeing our stuff, and you can become your own banker. You can keep more of your money.
That's right. So you guys will love this. Yesterday, I'm talking to a gentleman who's just getting started with his policy. So Amber, if you're still out there, this might relate to you. Okay. So he's married. He's got 2 children. He just started his policy about 1 week ago.
Okay.
His kids' policies, 2 policies, are ready to start basically today.
Mm-hmm.
His wife is going to be ready to start in a few days.
Mm-hmm.
Okay. So he's getting the whole family covered.
Awesome.
He calls yesterday and he says, hey, I need a little bit of help with my debt payoff plan. I mocked up some things on my own, but I'd like you to go through it and look at it with me. I said, you did it yourself. You know that's a free service that we offer you. Once you've got a policy, like we'll make you a debt payoff plan. He said, oh, you know what? I think I did know that because my wife got the email that said that, but I like to be a little self-sufficient. So I started on my own, and all
Awesome.
good. And so that's part of the reason I called, because I knew you guys would help and I wanted you to see what I did and that sort of thing. And so long story short, by the end of the call, he's got me pulling up, sharing my screen, my very first debt payoff plan that was created for me when I started that very first policy that we were talking about a little while ago. So here's how it relates to what you just said. We added up. I went through all the old debts, which was kind of fun. I was like, oh, I remember I had a Synchrony Bank credit card.
Oh, yeah.
And when it got to that one, I was like, oh, I bought my engagement ring on that card. And he goes, oh, I did too. And I still have the bill. And I was like, oh, well, it
Right.
just it helped us relate a little bit, because that's how I bought it.
Right
yeah,
there,
that's real life. Anyway, when we added them all up, all of the monthly payments, it was a little under $900. Sorry, a little over $900, like $912 of monthly payments that used to go out. Synchrony Bank. I had a Wells Fargo credit card in there. I owed the dentist. You've heard me talk about that before if you've paid attention to some of the things we've put out. Student loans, right? A little over $900 a month, every single month, that I have to earn and then I have to give away because of the debts. And so when we talk about infinite banking, it's about having control. It's about keeping the money, right? And so he goes, well, the reason I brought it up is because he asked me, when you started your policy, what did you do first? Because I want to pay off debt. I know a lot of people probably start there, but can you tell me what you did? And I'm like, no, I paid off debt. Like, I've got the sheets still. it's dated at the top. Like, this is where I started, man. Same place you're starting. It's time to get rid of all of these third parties out of here. And it was just so funny to think back when I first got that policy, right? When I first started, and I'm going, man, it would really stink to have all of those debts still. And with the payoff plans and the projections, I think I had like 9 total things. I think I still would have had like 4 of them, like still. If I was just paying them the way that they set it up,
like normal people,
paying the monthly payment, paying the minimum due, that sort of thing. And I just thought, man, I've come a long way. And it was actually a little good for me even to go back and just take a look.
See where you came from?
Yeah, take a look. I tell my wife that all the time. Never forget where we came from. Sometimes I pull into the old apartment and I'm like, never forget where we started, right?
That's what I'm talking about.
We're just having fun. That's all.
$900, man.
Yep.
And I was on the phone with somebody this week, and I'll throw this number at you just to get, a little reaction. But if people are hearing that and they're thinking, man, yeah, what would it look like if I could keep another $900 out of what I earn every month? I was on the phone with a guy this week, and 18,000 monthly income. Okay, bigger number. I'm not trying to shock you, but I'm just trying to say $10, 10,000 doesn't matter. 18,000, but 11,000's leaving in payments. So what I'm just trying to say right there is $900, $11,000 in payments, whatever it is, you can keep more of your money. And when you know better, you can do better. So that's why we jump on here. We try and share these best practices. Sergio giving insights, answering frequently asked questions, trying to get you to the introductory presentation, Amber especially. But yeah, man.
Sergio, Amber's got another question. Why don't you take this one? I'll read it for you. I know it's probably small. It says, can you also put this in a trust? She does say she's about to go watch the presentation to get a foundation of what's going on. But her real question is, can you own one of these policies in a trust?
Awesome question. Obviously, so the simple answer is yes. What we're going to recommend is let's start with banking first. Get the philosophy down of banking. But yes, the rabbit hole is amazing. It's super fun. You can learn so much. But yes, you can totally put it in a trust. I recommend maybe going in, maybe just doing a little bit of research on the Rockefeller family, something called the waterfall method.
There we go.
Down the road. It's super cool. So yes, you can totally do it. A lot of wealthy families in the past have done it. A lot of wealthy families continue to do it. It's a little bit more complex. I don't know if it's something that specifically the Banking Bros is going to dive into teaching you specifically, but we will point you in the right direction if anything. Right, Jonah? Correct me if I'm wrong, but it is 100% possible for you to do that. I know in the future, as I get more banking policies and get myself in the position that I want, my next best step for me and my family and my businesses and what we're looking to do is 100% to structure everything properly through a trust so that everything's protected for generations to come. So yes, 100%.
Absolutely. I told someone recently, just the other day, that the reason that people love trusts, they're getting a lot of publicity these days. A lot of people are talking about them, but the reason that people love them is because they want to get out of the tax liability, right? And they want to make sure their family gets it without having to jump through hoops like probate court, right? I want my family to get it, and I don't want to have to pay taxes on this stuff. The cool thing about life insurance is that those two things are basically ruled out of life insurance. So you don't need to jump through a bunch of hoops with your very first banking policy to make sure that it's in a trust and whatnot. I think in the state of South Carolina where we live, you'd have no income tax, of course, no income tax on life insurance proceeds. So that means when you pass away and your family gets the money, there's no income tax. And it also means if you use the cash value that we're going to teach you about in that presentation, there's no taxes. In the state of South Carolina where we live, you do get estate tax if and only if you pass more than $12 or $13 million in life insurance. So until you get up to $12 or $13 million, we don't actually have to run and jump through a bunch of the hoops for the trust just because we have life insurance. Right. Now, if you've got other assets, you own a business, you own a few houses, you own a big extensive jewelry collection, you've got the family Bible that's got everybody's names and dates and ages and you got to make sure that passes appropriately, then obviously a trust is very, very helpful. But if you're just getting started, it's just me, my family, that sort of thing, one life insurance policy, you don't have to run and jump through those trust hoops right away.
Yeah.
Yep.
It's as beautiful as it's a piece of private property.
Yep.
And you can make the trust, when you have one, the beneficiary. You could make the policy part of the property that you put into the trust. At the end of the day, that's you being empowered to make those choices and decisions, which is where it should be.
That's exactly right. Okay, just in case you're just joining in, I know we're live, so that means you can come in, you can come out. But just in case you just got here, thank you for being here. This is our Ask Us Anything Cash Coaching Infinite Banking Hour, where we, Jonah, Jesse, and Sergio, take time to answer your questions or teach you a little bit more about the infinite banking concept. Sergio, why don't you give your 30 seconds or 1 minute on exactly what in the world infinite banking is?
Yeah, awesome, guys. So for me, infinite banking is all about control. The idea you'll hear a lot is becoming your own banker. It's as simple as this, guys. Banks are already doing this. Infinite banking is something that banks practice themselves. We teach people, obviously, how to take that banking function back. Another simple way to explain it is, hey, just change where your money goes first. Instead of putting it into a bank first, put it into your own system, which allows you to then operate just like a bank and invest your money, spend your money, like you guys talk about, save and spend in the same place. Eventually, hey, hopefully the goal is save, spend, and invest, right? So that's the goal.
I love it. Very good. I think it would be kind of fun to just talk about some of the things that are happening over in our Facebook group. So just in case you're watching and you want to be a part of that, our Facebook group is called Infinite Bankers, because that's what we are. We're Infinite Bankers. So it's a private group. You got to search Infinite Bankers in your search bar. And if you do and find it, click on Ask to Join and we'll let you in. But we've got Jake D in the Facebook group who recently said that he took out his first loan and he's paying off 6, not 1, not 2, not 3. Didn't LeBron James say that or something? We're talking about how many championships he was going to win. He got all the way to 6, I think. 6 high interest credit cards with his first policy loan.
I got a text message over that.
Jesse, hit that button. I need you to hit that button, Jesse.
There we go.
There you go.
I was happy to get that. I was happy to get that text message as well, and then I was glad that Jake put that out there in the group for everybody to see.
Yeah,
it's helpful. It's inspiring.
Yeah, 6 different. So let's talk through it like we just did with with mine, right? So everybody, I think, is aware if you pay off some credit cards this month in January, you don't have to pay them next month in February. I'm pretty positive that's how that works, right? And so what that means is come February, when he earns his money, his income, I don't exactly know what Jake does for work, but let's assume he's got a W-2 job, which probably means he could expect around the same check every week or every 2 weeks or however it comes in, right? But next month, February, when he gets that income, when he gets that pay, guess what doesn't have to leave?
The money to those people.
The money to those people, which guess what that means he has?
The money.
The money, right? Which means that he just increased his lifestyle. He can do anything he wants with the money. Now, if he's smart, he'd probably put the money back into the system that got him there in the first place to grow the system. But he doesn't have to, and it's his choice. And that's the beauty of being a private banker. I don't have to worry about the third-party credit card companies anymore, right? Yeah, they're out of here, right? Beautiful. And I love that. I think that's so cool.
Love celebrating the wins.
Yep. I love that very, very, very much. Man, if you have not checked out some of the things that we are putting out on our YouTube channel, I think that would be a good place for you to go as well. If you're live watching us right now on YouTube, thank you. Please subscribe to the channel because we put out videos every single week about the infinite banking concept. In fact, some of the videos that I've been working on recently are infinite banking versus, where we just highlight very popular things out there in the financial space, and we just compare them to infinite banking using 8 different principles and ideals of what infinite banking is all about. Why don't we talk through those few just for a second? So, Sergio, I'll give this first one to you. The first thing that we talk about in some of this infinite banking versus YouTube series are guarantees. Guarantees. Your infinite banking policy has guarantees. It's printed in the documents. It's on top of your illustration. There's a big word that says guaranteed. I think that's really cool. Sergio, my first question to you is, do you know of any other financial vehicles that guarantee things, and I don't care what they guarantee growth, guarantee your principal is still there. Like, do you know of any other financial vehicles that would have a guarantee on it? Can you
Right.
think of any?
Honestly, I don't think I can. I think there's a lot of things that are very similar and that operate in a very similar way. But as far as a actual contract base piece of paper that tells you this is guaranteed to happen, I don't personally know anything that is guaranteed. If somebody does, then hey, let me know. Shoot me a DM. I always love to learn. But as far as official contract based paperwork that says guaranteed to grow, guaranteed to pay out, no.
Right. Jesse, what about you? Anything else that you can think of?
I mean,
in the finance space, guaranteed?
What comes to my mind is how our buddy Brent would say, well, your 401k has a guarantee. It won't go below zero.
Right.
Which
That's
just
a good guarantee.
hurt me and made me laugh at the same time.
It did, right?
I had the 401k.
Yeah. The real sneakerhead. I started my cash value LI. I'm not sure what LI is, but I think he's talking about infinite banking policy. Cash value life insurance. That's my fault. Yeah. Cash value life insurance in 2020. Still front loading it annually. Best decision ever.
Awesome.
Well, we appreciate that.
Awesome.
We appreciate that. So that was kind of my setup. It wasn't really a setup. I truly was interested. Is there anything else out there that's guaranteed?
I mean, CDs, right? CDs is maybe one thing that comes to my mind where, but there's pros and cons, and we're going to get into these other attributes, of course, where you won't have those advantages. But if you go with a CD, you got a pretty reasonable expectation of a guaranteed growth.
Right. Okay. I'll give you that one. I like that one. A CD. So actually, I was really, really, really interested in CDs back when I was a banker. I used to work at a bank, and I never actually ended up getting one. I learned about infinite banking before I had any money. So yeah, but I agree. CDs would probably be one. Okay, so we found one other financial vehicle out there that would have a guarantee, just like your whole life insurance would. So here's my question: are guarantees important to you? Are they important to the average person? Because it seems like we're putting a lot of money in places. I mean, people put money in regular bank accounts, like checking accounts, savings accounts. They put money in 401ks and IRAs. They put money in 529s and HSAs. They put money in high yield savings accounts, are getting a lot of shine these days.
They are.
They put money in cryptocurrency. They put money in Bitcoin. They put money in all these places, and none of these places have a guarantee on it. Sergio, what do you think's going on? Do people value guarantees, or what do you think?
Honestly, I think most people are just uneducated when it comes down to what it really means, and lack of options. It's like I mentioned it earlier when we were talking about like knowledge and information. I think we're just stuck in our old ways, and we don't necessarily want to learn new information. So I think that's what it really comes down to, is really just being open-minded to like, hey, there's got to be other ways. If what is it? What's the quote for insanity? Doing the same thing over and over, expecting a different result, is the definition of insanity.
Yep.
Right. And so ultimately, I think that's what some of us get trapped in. And I'm just glad that I was able to take the right color pill. I don't know what pill it is for you guys. I can't remember the Matrix, what color it is, but it just opened my eyes to new ways. The red pill. That is the red pill. Ultimately, to open my eyes to new information. So.
I love that. One of the other attributes we talk about all the time, and I'm especially talking about in this series, is principal protection. So what that means for all of those who are listening out there watching, it means, okay, I know we put money in places because we want to see growth. But if I put $100 in, I want to see growth, I still want to make sure that I can get to my $100, that my 100 that I put in doesn't go down or backward, or I lose it. And so principal protection is, of course, available inside of infinite banking policies, whole life insurance. So my question now is, same question I had before. Do you think people value principal protection? Because a lot of these places where they're putting the money, there isn't any principal protection, right? Think about your 401k. You if your 401k can go down to zero, there's definitely not principal protection.
Right.
You put money in that thing from every paycheck, and that thing can go backward even past what you contributed. That means your principal is not protected. Now, there are lots of financial vehicles that are going to have principal protection, right? Your money's not going to go anywhere, especially if you don't invest that money, right? If you use like a savings vehicle, then you're going to have principal protection. But I'm wondering, when people want to go earn more, are they valuing principal protection? A lot of people are saying, for the potential to earn, I'll give up some of these things that I value, I feel, right?
I think people do value guarantees.
Okay.
But, and I'm going to give you a quote here, all right, that we're not hearing at home, not hearing at church, not hearing from coworkers, right? And it's Warren Buffett's rule number 1.
Don't lose money.
Right? And then rule number 2, refer back to rule number 1, right? So I think they do. I think if, I walked up to anybody on the street and said, hey, you got $100 bill? They say, yeah. And I say, well, let's put it in this box. And in 5 seconds, maybe it's there, maybe it's not. Will you do it? But hey, maybe there'll be more than 100. I think they're gonna keep walking, right?
Yep.
So we're not conditioned, we're not trained, we're not encouraged, we're not educated, like Sergio said, to actually look at things, to actually consider things. And we're busy. It's life, it's career, it's home, it's marriage, it's all these other different things as well, right? So we're not encouraged, we're not educated to actually stop and consider these things. But I think when we do, then we do awaken to the value of protection of principle, and that's obviously why we're here to talk through these things.
And I'll add to that. I was thinking about that exact thing you're asking, Jonah, and it was just like, how is it that people can sit here and listen to this information and not move on it, right? Like, what is it that's blocking them? Like, how, are they so busy? Do they not trust? Do they not understand? There's obviously all these variables, but for me, it didn't take me that long. It took me a couple of times to get educated, to be like, this is it. This is what I've been looking for. And it's funny you asked that, because it's like, what is it? What is the factor that limits everybody from jumping into that pool that, it's like, hey, I want to get wet. It's really hot and I want to get wet, but it's just cold enough that maybe it's not worth it. So it's just like, to me, it's the psychology behind all this is so crazy that sometimes you just got to move. Like, you got to move in the direction that's going to move your life to where you want to go. So it's just interesting to me.
You know what I think it is, Sergio? I think it's the comfort, the change. That's what I think it is. So here's what I'm saying.
The word is change.
We grow up in our schooling system, and our parents and our grandparents, whatever it might be, learning some of these principles, right? I talked to somebody recently that was going real hard on Roth IRAs. Okay. Roth IRAs are popular, right? And all I did, it was funny. We were on a video call, so they were kind of like laying into me a little bit about Roth IRAs. Okay. So I Googled, when did the Roth IRA come into existence, and hit the share screen button. That's all I did, because they weren't really going to let me speak. Right on the top of Google, right? 1978 or something. No, I'm sorry. Roth IRAs might be 80. Oh, I'm going to Google it right now so I don't mess this up.
Got you.
So not around long enough to have retired itself. I got a buddy, Joe. He says that about 401ks and the IRAs and stuff. He says they've not been around long enough to even retire themselves.
There we go. So I pulled it up. So I pulled it back up. I apologize. I messed up the year. It's 1998. Whew. 1998, when this Roth IRA came into a regular person could use one, right? Proposed a little earlier. You got to pass a bunch of laws and bills and all that fun stuff. 1998. That's all I put on the screen, because he was going into it. And the gist of that was, this is you're fighting for this like this has a proven track record. Like you said, this doesn't have a proven. They made this up while you were alive. Right. And you're fighting for this like this is everything. The Roth IRA is exactly how we're going to retire with riches and with wealth. I'm like, okay, go find me somebody that's done it. Go find me somebody that's done it. Yeah. And then I'll listen to them. But until then, like they just got here, folks. They just made this up, right? There was somebody else talking about the 401k. I've done the same thing in the past, where I just go look at how long it's been around, how many times they've changed the rules. The 401k is like 7. So I believe that one's the 78, as opposed to the Roth IRA. Roth IRA is 98. I think 401k is 78. Gotcha. Like, these are not, your grandma did not have this. Nope. They made this up recently.
Yeah. Yeah. And I get that you're talking about the YouTube, series that you're covering. It's worth evaluating things against each other. But at the end of the day, too, we could in the same breath say, put money in that Roth IRA. You
Yeah.
don't have to choose between, do I have a private family bank that creates
Yep.
this legacy and compounding capital and I still got money to spend and all this, or
Yeah,
do X, Y, or
it's
Z.
just it's the philosophy, same as buy term, invest the difference. It's the
Right.
philosophy that this is the answer.
Right.
And I don't need to pay attention or learn anything else. And
That
I'm
part.
going, we
That
had
part.
a podcast recently where the young lady, Kim Butler, got on our podcast. You'll see that here shortly if you're paying attention to our podcast. And she said, that's typical financial planning. The 401ks, the IRAs, whether it's Roth, self-directed, that sort of thing. That's typical financial planning, but that's not traditional financial planning. Traditional financial planning is whole life insurance. It's
Right.
the only one that's been around for 100, 150, 200 years.
Now I've heard it described as traditional versus modern.
There you go.
Also,
right?
Yeah,
It's the modern stuff.
This modern bend. Yeah.
Right? If you want the traditional stuff, the stuff that's actually got a proven track record, it's actually what we're talking about. It's so funny that we can talk about it in the sense of retirement and also talk about it in the sense of Jake paying off 6
Right.
high
And
interest credit
legacy
cards.
for Amber, all of it.
Right.
All of it.
All of it.
So
Isn't
what,
that
all right, at least give me a third characteristic. Give me a third attribute of
liquidity.
Ooh, okay.
Liquidity. That's a big one.
Yeah.
A lot of people pump money into things and their money immediately becomes illiquid. They cannot get it again without fees, penalties, taxes.
Can I give you one from this week?
Uh-huh.
So fella works his 9 to 5. He's on the phone with me yesterday, but he's been building this side business, growing it, and it's going great.
Nice.
He's to the point now where the first 2 or 3 pieces of equipment that he used for the time being, he wanted to phase them out to bring in the new heavy duty, expansive equipment to take the business to the next level. And he's realizing, yeah, this business is going to do so much more for me than these traditional things that I've been putting my money into because of my 9 to 5 that he still has. Right.
Right.
But then, of course, he's talking to me about his frustrations of having 6 figures plus in these qualified plans and such, where he cannot get access to the capital, doesn't have that liquidity without these roadblocks and penalties and taxes, all this different stuff for him to go out and pull the trigger on. And he's mad
on a business that's working for him where he can make a bunch of money.
Yes.
Right?
So frustrating for him.
That's crazy. Sergio, what financial vehicles have you heard that would fit into this category where their money becomes illiquid as soon as they contribute, and yet people continue to contribute over and over and over and over again? I heard a statistic, I think it was during COVID maybe, where they talked about the average person doesn't have an extra $300 to save their house. Do you know what I'm talking about? It was a statistic where it was like, if you needed an extra $300 to save your house, the average person doesn't have it.
I haven't heard that
Right.
particular one. I've heard something around, the 500 medical emergency or whatever kind of thing.
Yeah, and speaking of homes, you're obviously talking about that. That's the first thing that I went to. I mean, obviously, what is the American dream for most people? To own a home, and watch the equity go up. And of course, that is a great vehicle to build equity in. But at the same time, it's not an easy vehicle to get out the equity. You've got to have a really good credit score. You got to go through a lot of hoops. You got to have a relationship with a bank. It's not just it's not as simple as building equity in a whole life policy. In our case, that's an example, right? As you pay premiums up, I can't just call up my insurance provider and be like, hey, I want to take out a loan to grow my business. Like Jesse was talking about, I want to take out a loan to do this, whatever it is, to pay these debts off. It's the crazy thing is that, imagine having, $100,000 of equity in your home and having to jump through a bunch of hoops just to get access to the capital.
Terms and conditions apply.
That's not imagine. That's happening to people every day. Every piece of paper you came into in the last year, go ahead and turn it in. My goodness.
Right.
Just to get the money out of the house that you put there. Did you not make the payments?
It just all comes back to control. I mean, really, for me, the more I learn and the more I become financially educated, I realize that control is king.
Yep.
Right? Cash is king, control is king, and we're living in a world where that's what we're battling for, whether you know it or not. You're battling for control of a lot of things, and it's not just your cash. It could be your mindset. It could be a lot of other things. I just challenge you to think bigger.
I love that.
We've just covered 3 3 attributes, and I'm in.
Three attributes of the 8.
You
There's still
said
more.
You said 8.
We still got we didn't even talk about the big ones like taxes.
Right.
Got to talk about taxes, right? There's all sorts of things you got to consider. You know what I mean? Anyway, Jesse, why don't you answer this question for us from Instagram, username Frescavant, maybe? I don't want to mess it up, but if I got close, sorry. Or if I didn't get close, sorry. And he says, or she says, how much do we need to start?
Oh, great question.
Savant. Yeah. So it depends. I'm going to quote Sergio from earlier when he answered the question. It depends, right? So you pick your number. All right. And think about it like this. We're talking about banking. Don't you decide how much of your income goes to the commercial bank? You fill out the direct deposit. So you pick that, right? Like you could deposit in the bank or not deposit in the bank. Part of your paycheck, all your paycheck, direct deposit there or not, right? You should become familiar with what's going to be appropriate for you once you've seen our presentation video. Once you've had that one-on-one conversation where you're getting your personal questions answered with one of our coaches, it'll just become apparent to you what you should be doing, right?
That's it. Okay, so if you're over there on Instagram, there's a link in our bio of our profile. If you click on the link, it'll ask you for your name and email. It'll let you watch our feature-length video. It's 55 minutes. It explains infinite banking, our save and spend system from start to finish. As soon as you're done with the video or during the video, you can click the link right at the bottom of the page and book your call. Once you're on the call, we will answer your questions specifically to your specification, I guess, right? I don't know if I'm allowed to say your question specifically to your specification. It's too many.
I like it.
You know what I mean? But we'll answer your questions.
You're spectacular.
There we go. And we'll make sure that you get your answers so you can determine if infinite banking is right for you. So you can determine if you want to start and how much you want to start with. And that's what we do here on our channel. We teach the infinite banking concept, the save and spend system to anyone who's interested in learning. If you have a knack, if you've got an itch for financial education, then you're going to want to stay. You're going to want to subscribe. You're going to want to follow whatever platform you're on so we can continue to drip on you little by little what the infinite banking concept can do and how it can change and revolutionize what you've always thought to be true about money. And just maybe, like you said earlier, Sergio, maybe the problem isn't so much what you know. Maybe it's what you think you know that just ain't so. Thanks so much for joining us for this hour of our Ask Me Anything Cash Coaching Infinite Banking session. We appreciate you. You can find us on any platform. Join our Facebook group if you like. And we'll see you next week at 12 p.m. Eastern, Thursday, right here.
See y'all.
Now tuned to the banking bro. Said we couldn't make it, drink or settle, this the life we chose. Gave a lot of game, we never got a lot of things. Bow your head and say the prayer, we taught you how to be the bank.